Today, we are breaking down the complex world of home financing to turn your property dreams into reality. Jason Lai is back with us, a seasoned investor and expert in mortgages who is going to review everything you need to know about getting pre-approved for a mortgage in New Zealand. Whether you're a first-home buyer or a savvy investor, Jason is going to share insider tips that could save you thousands and fast-track your journey to home ownership. Jason, what documents do we need to prepare to get a mortgage pre-approval?
Thanks, Danny. The documents that one would require for a pre-approval would ultimately be dependent on the person's situation. And what I mean by that is, are you, say, a PAYE, employee, or do you run a business? Because it's, or are you a contractor? Because the documentation required for a pre-approval for these three different types of applications will slightly vary. But to answer your question, in general, what you'll need is some sort of evidence around the income that you generate, some sort of evidence around your 3 months latest bank statements, some identifications that could be passport or driver's license, amongst any statements for any debt facilities like personal loans or credit cards that you potentially have, as well as a declaration form signed to work with the advisor of your choice as well.
Mm-hmm. Yeah, you mentioned there are different sources of income and employment situations. So how long does it usually take for you to get a pre-approval?
That would widely vary. Certainly varies depending on the bank, bank's workload. Also depends on the complexity of the application as well. You can imagine that if, a stock standard mum and dad, maybe they're looking for their very first home and they're both, their income's easily verifiable through pay slips versus somebody who might have, say, dozens of properties, complex debt facilities, and maybe, quite a number of businesses to match, would take a little bit longer to actually assess through. So right now, we're sort of seeing turnaround timeframes generally within 10 working days for most applications to get an answer. However, there certainly can be scenarios where it would take, up to 15 working days or even potentially longer for certain types of scenarios.
Okay, so you're saying they're between 10 to 15 working days to get their pre-approval. Now, in the community, we have so many clients buying property all the time. And usually when it's a younger investor or a beginner, they always ask, I really want a pre-approval. But is a pre-approval really necessary for you to go out there and start placing offers?
That's a great question. The technical answer is no. Yeah, absolutely not. I think it's a misconception in the industry that you have to have a pre-approval before you are able to even put forward an offer on a property. But the reality is if you've had a chat with, say, your mortgage advisor, you understand your position, you understand how lending is calculated, and they've provided you a number, well, chances are, because they know what they're talking about, that it should be within reach, within those figures, as long as all of the information provided is accurate up front.
Yeah, and is it right to say that even if you do have a pre-approval, that's not necessarily approved for the specific property they will find in the future? So it doesn't, avoid the process of having to get, the bank to approve a specific property when they find one.
Yeah, that's exactly correct, because at the end of the day, what a pre-approval is it's a hypothetical scenario based on, certain deposit up front and, your ongoing income. And the reality is the banks will still have to, even if you do have a pre-approval, be happy with the actual property that you are selecting at the end of the day. And there is also a possibility where they might not be happy with that security as well. Mm-hmm. So this is certainly something to bear in mind, that even if you have a pre-approval, the property still needs to be checked over by the bank.
Yeah, so by having a pre-approval doesn't mean you have a guarantee that the bank will lend you that money for the property that you choose when you start shopping around.
That's correct, yeah. They still want to ensure that they'll be happy with the security.
Mm-hmm. Awesome. Now, let's say we got a pre-approval. How long is it valid for?
Generally speaking, most pre-approvals are valid for 3 months. And as long as your financial situation, has remained the same, i.e. your income hasn't decreased for the worse, you haven't taken on any extra debt in any capacity, and your assets and liabilities basically have remained unchanged, or positively improved, that is, then you can generally get an extension for a further 3 months in a lot of cases without going through the whole process again. However, if after that time frame, so that's the 3 original months plus a 3 months extension, if you've not managed to secure something, generally speaking, you will need to go through a full credit application again and restart the process.
I see. Okay. And are there any fees involved for the client to get a pre-approval?
For the most part, no. For the most part. There are certain circumstances. Again, it does depend on who you're working with as a mortgage advisor, because different advisors do operate in different capacities, because it is a lot of work to get a pre-approval sorted. But generally speaking, the answer is no in most cases. We don't charge a fee to do pre-approvals here at Mortgage HQ, but there are some operators out there that will charge.
And I understand that obviously, we work with multiple banks and they all have different criteria. So can I go out there and get pre-approved with all the banks just to see which one gives me the best offer? Is that recommended?
I wouldn't say it's recommended. Certainly not. The reason why is because at the end of the day, right now, you have to remember that banks have limited capacity in how quickly they can get loans approved, because at the end of the day, there's still humans behind all of the lending application process. And so the reality is what would end up happening if everybody were just going to every single bank and putting through an application is we would literally clog the financial system, and it'd be even slower than it currently is at the moment. And so that certainly wouldn't be wise. I don't think it'd be doing the banks justice, especially when, as a mortgage advisor, you should have expertise to know exactly which bank would be most suitable for your client and what is the best outcome. And so, therefore, generally speaking, you'll look at the most suitable bank up front.
For that specific client as well.
That's correct, yeah.
Yeah. So while we don't have AI taking over your jobs, let's be cautious on getting pre-approval everywhere. Cool. And what's the difference between having a conditional and unconditional pre-approval?
Yeah, so referring back to the question before, so pre-approval is generic by nature, and it is going to be based on certain circumstances. Now, if you do have a conditional approval and you have found a property that you would like checked off by the bank is typically going to want to run through certain things as a part of their own due diligence to make sure that they're happy. Now, sometimes they may ask for certain conditions like a valuation report to ensure that they're happy with the level of lending that they're going to give out based on that property. That might be a condition. There might be another condition around, if the property is in a good state physically, i.e., should we get a weather tightness report done on it, from the eyes of the bank, that is, or should the bank, request a builder's report? So these can all be separate, different conditions. Now, an unconditional offer is when the client has fully checked off each condition and the bank is happy to give that lending.
And, well, on that note as well, obviously you mentioned just before, if your situation changes, that pre-approval can change. So let's say I got a 3-month pre-approval, and maybe my situation has changed. I lost my job, or I got pregnant, or, something happened. Can I just go ahead with their pre-approval, or?
Yeah, unfortunately, that will be a material change to the application and your position. So you will have to inform your mortgage advisor, and they'll speak to the bank and have a chat with you. But that will certainly impact your application.
Yeah, so that's important to know that if anything changes, please let your advisor know, because it can have an impact on the initial pre-approval.
Absolutely.
Now, we have a lot of first home buyers that are leveraging their KiwiSaver to buy a home. Does the KiwiSaver amount, or does it affect the pre-approval in any way?
The thing with KiwiSaver is inherently you are investing in the share market. And so there is going to be volatility attached to your KiwiSaver over time. And so generally speaking, this can have a impact on your final deposit at the end. And so what a lot of people do out there in reality is they might go from an aggressive fund to potentially either a balanced fund or potentially even a cash fund as they look to withdraw those funds to ensure that their deposit isn't impacted too much, for better or for worse. So it can have an impact on your deposit at the end of the day.
Awesome. So I guess the message here on pre-approvals is have a very close relationship with your mortgage advisor. They should be able to tell you how much, you can potentially borrow and avoid all the process, not just for the client, but for the advisor and the banks as well. And then once you find a property, you can attach the security or get, approved for that specific asset that you're looking to buy. Would that be about right, Jason?
Yeah, absolutely.
Yeah, awesome. Well, thank you for coming today. And guys, if you enjoyed the podcast, please make sure you give it a like, share with your friends, share the knowledge around. But I'll see you next time.
Financial freedom. Financial freedom. Oh yeah. Financial freedom.